FOMC says higher for longer. This is what you need to know before the bell. FOMC minutes released yesterday said the Fed is going to continue hiking rates until they win the inflation fight. Now, markets rallied a little bit yesterday afternoon, but again, really just struggling with this current consolidation range that we've been in really for the last 2 weeks. So despite hopes of higher markets in the short term, markets really haven't done much of anything this morning. Futures are flat-ish, and so we'll see what happens. But one of the things to pay attention to here, and some potentially bullish news, is that the market MACD signal, this has been a really good indicator for us this year to increase and reduce exposure, is very close to turning positive. So that could help give the lift to a market short term. But again, there's a lot of resistance sitting just ahead of the market. So again, upside may be somewhat limited, and particularly because the signal is occurring only about halfway through that correction process. Again, hasn't happened yet. But if it does, there will be a limited lift to the markets because we'll be very quickly back to very overbought conditions in the market if we do get that type of a rally. Lately, there's been a good bit of chatter about gold prices on the rise. That's something that you actually may want to start taking some profits in. Gold has had a very good rally here as of late. After spiking up here initially, gold has been climbing up to about $1,850 an ounce. Now, this has got a lot of the gold bugs excited here lately, but again, really just confined within a long-term trading range. This really hasn't done much of anything at this point. Certainly has not been the inflation hedge that many had expected it to be, considering we have near 8% inflation. But gold has been improving here lately, but getting fairly overbought here. I'd be looking to take a bit of profit here, look for a pullback to around 1750, 1760 potentially for an entry point if you're looking to buy some gold for a portfolio. But again, market mostly overbought on multiple levels, starting to push up towards 2 standard deviations above the 50-day moving average. Again, typically a point when that occurs that's been at least a short-term peak in prices. So again, the bullish aspects of gold have been improving lately. The performance obviously picking up a good bit from where it was earlier in the year. But again, just recovering a lot of that previous sell-off. So a lot of investors just starting to get back to even. Again, good opportunity here to potentially take some profits in this recent rally. If you haven't done so, a lot of trap longs here will look to get out as well, pushing gold prices back down. Again, gold's a commodity. It's not an inflation hedge. It's not really driven by anything other than pure speculation about the future. So again, just look at this as a good trading opportunity to take some profits and reduce your risk. Oil also is another good area to take a look at. Energy stocks had a banner year last year. A lot of people piling into energy stocks this year, hoping for a repeat of what happened last year. Oil prices have come down here lately, and again, as the economy starts to move towards a recession, you would expect oil prices to decline further. Oil prices are pretty oversold here, real short term, but triggering a MACD sell signal as well. So again, lower oil prices here would not be a surprise because as demand reduces because of a recessionary impact in the economy, you would expect lower oil prices to result from that. Of course, that is a direct input into the price and earnings of energy companies, which would also suggest that massive outperformance in energy last year may not do as well this year. Already, a lot of the stocks in the energy sector are starting to come down here, but there's still a fairly large gap between energy stocks, the prices of energy stocks, and the underlying commodity. Energy stocks have really not corrected nearly as much as oil prices have at this point. So again, be a little bit cautious. You may want to reduce some exposure to energy there. More of a trading range opportunity this year more than anything else. Energy stocks are oversold short term. Wouldn't be surprised to see a little bit of a bounce, particularly in some of the drillers. But again, I'd be just regularly taking profits and rebalancing risk there. Not going to have that massive outperformance, most likely, that we saw last year, particularly in a recessionary economy. That's what you need to know before the bell. We'll see you back here tomorrow.